Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, June 17th. A disappointing forecast from FedEx and a rating cut for multiple banks weighed on stocks in early trading and eventually gave way to a broad selling effort. Stocks were able to recover from their lows but finished the session with mixed results. FedEx announced ahead of the opening bell better than expected quarterly earnings but issued downside guidance, losing its favor among investors. Meanwhile, financial stocks came under sharp pressure in the early going and finished 2.6% lower. Banks were a primary source of weakness as Standard & Poor's lowered its ratings and revised its outlooks on 22 banks. The move came as several firms announced that they have redeemed the preferred shares that they had issued to the Treasury under the TARP program. On a related note, President Obama proposed a new regulatory structure for the financial sector today. Financial stocks led the S&P 500 briefly below its 200-day moving average, but stocks were able to find support there. In turn, the stock market swung from a 0.9% loss at its session low to a 0.7% gain at its session high. The advance failed to hold into the close, though. Material stocks and energy stocks also weighed on the broader market. Energy stocks were unable to recover from early weakness, even though oil prices settled higher by 0.8%, near $71 per barrel, after being down more than 2%, despite a larger-than-expected weekly inventory draw. Material stocks also failed to recover, despite the CRB Commodity Index's rebound, which suggested a broad range of commodity prices turned higher. The CRB had been face-to-face with its fourth consecutive loss, but mustered a 0.4% gain. According to the CRB, commodities are up almost 12% year-to-date. On a related note, the Consumer Price Index increased 0.1% for May, as did core CPI. Participants were prepared for a soft reading in the wake of yesterday's PPI data, so the latest installment of inflation data didn't provoke much of a reaction. Despite a rather sloppy close, healthcare stocks were able to climb 2.1% to log some of the best gains for the second straight session. Consumer staple stocks, discretionary stocks, and tech were also able to advance. Tech's heavy presence in the NASDAQ actually helped the index outperform the other headline indices. I'm Jeffrey Ham for Briefing.com, and thanks for listening.